want to welcome everybody to the last panel of the day. I think this is going to be perhaps one of the highlights of the conference. Somebody started laughing. You're wrong. It is going to be one of the highlights. You know, I want to start out by bringing up something that was very, very interesting. It came out in Barron's magazine yesterday, and it ties in directly with what John was just talking about, and ties in directly with what we're going to be talking about on this panel discussion. I didn't see this, but I have it on pretty good record that there was a picture on the front page of Barron's of the President of the United States, and underneath that it said, "We too can be Greece." Find that to be interesting. Three of the four panel members here are really good friends of mine. I'm going to start down at the end with Grant Williams. Grant has been a regular on our radio show for, what's it been, man, 2.5 years? He's the only guy in the world who I'm willing to call on my nickel and talk to him for an hour. That's how valuable I think of Grant Williams is as a person. Peter Schiff, everybody knows Peter. Peter's a great guy. We've done a lot of interviews with him over the years. I think I still owe you 25 bucks for the book, but I'll get the money to you, the latest one. Rick Rule. I do business with Rick. We've known each other for probably 20 years or so. Great mind, in my opinion, in macroeconomic issues, among other things. John, I have not had the pleasure of working with you before, but I obviously know a lot about you, and I'm looking forward to this particular venue. So, Grant tells me, everybody tells me you're a great guy, so don't be too hard on these guys. Okay, our subject here...
They're all bigger than I am. So
I'm sorry?
They're all bigger than I am. So.
Well, I'll come to your rescue, okay? Having said that, this particular panel is entitled Creating and Preserving Wealth, and I don't think there's anything more important right now anywhere in the Western world than creating and preserving wealth. This is going to be really easy for me to do because I'll bet you I can ask one question and then I could probably just leave the room. I want to start with my friend Grant Williams. Grant, you and I have been talking on the air for a long, long time about this particular subject, creating and preserving wealth. What do you have to say about it?
That's a pretty broad question, Al. Yeah, look, I don't think it's ever been more important to think about preserving wealth than it is right now, because not only is the world a very unstable place, but you have governments all around the world who are actively trying to take a bigger piece of the pie because they need it. They're in trouble, and they need to get all the revenues they can possibly get, and the only place to get money is from people who have it. Governments don't produce anything. They are merely a confiscatory mechanism to take money away from people who produce it. So you really have to be concerned that the situation we find ourselves in after 2008, it's not going to get better anytime soon. Interest rates are going to stay low. When people talk about the Fed possibly easing back on quantitative easing, don't believe it. They can't. It's not going to happen for a very, very long time. And when it does happen, it's likely not going to be their decision. So I think you need to make sure that you have a decent proportion of your assets in gold. I mean, this is a precious metals conference, and I think the guys on this, that's a president, tell him I'm busy, John. I think the people on this panel will have a similar outlook about gold. And realistically, assets, as John was saying before, and assets, real assets that cannot be printed by governments, real estate, farms, things that throw off a cash flow. And with that, I'm going to let someone else talk, because I got the hook yesterday for talking for too long.
Moving over to you, Peter. Peter, your talk was entitled, Don't Believe the Hype, the Financial Crisis is Not Over. I have to assume that you're not a big President Obama supporter, or a supporter of his policies.
Obviously. But, you know, in the panel, as we were discussing wealth, and I think it's important for people to really understand, you know, paper money isn't wealth. It can represent a claim on wealth, but I think right now those claims are very tenuous, especially, you know, when you have a currency war that's going on. And you know, the funny thing about a currency war is it's different from a conventional war in that the object is to kill yourself. And you know, I think that that some of the more fiscally sound countries are going to surrender, wisely so. And I think, unfortunately, America is going to win the currency war, and that means if you have dollars, if you earn dollars, you lose. And so, you know, John was talking about one of the winners in the currency war, the real winners, is gold, or things that central banks can't create, can't print. So I think people have to get their priorities straight and understand that, you know, it's not about how many dollars you have, but how much wealth, legitimate wealth, you can preserve by owning tangible assets, whether it's resources, precious metals, or companies. that can pay dividends based on their earnings. You don't want to own bonds and clip coupons because you might not have any purchasing power at the end of the day.
John, I'd like you to weigh in on this, if you would. You've got a pretty powerful organization. I know that you're part of Casey Research now. You brought Grant Williams on board, et cetera. You got a huge readership. What do you think about all of this?
I think we'll know by the end of the year, maybe within 6 months, a little bit more about the direction of the dollar. I'm not as pessimistic yet about the dollar. In fact, if we put the deficit on some type of sustainability path over 5, 6, 7 years, and by sustainability, we could run, from a macroeconomics perspective, a $400 billion deficit and it not be a problem. As long as your deficit is less than the nominal growth of GDP, you're not falling behind. Now, $1.3 trillion like we're running now, that's a problem. Now, philosophically, we should be running a surplus. I'm just talking about creating a problem in terms of values. If we're running a deficit of under 400 billion, of 300 billion, which we could get to with some rational way and some restructuring of entitlements, couple that with the oil revolution that's going on, where we will not only by 2020, 2022 not be importing oil, we will be shipping it out. We could have a positive trade surplus within 10 years, 12 years. When we stop shipping dollars out of the world, and the world is still a dollar economy, and it will be, the value of the dollar is going to become remarkably strong, and the Fed could print trillions of dollars, and the dollar would still be strong. Now this is if we create some path to a credible deficit plan. And if we do that, the dollar is going to be far stronger than any of us think. The Fed will be able to print more money than seems rational, and we'll actually get away with it, which is I'm not terribly happy with. But we could see a very strong dollar simply because of the really lucky thing that we found lots of oil in the world, because we stopped shipping dollars out.
We don't have that much oil, but you know, there's a lot of ifs in what you're saying.
The big is yeah. Did we do the deficit? I agree.
Well, we're not. In fact, it's more likely that the deficit is going to get bigger, not smaller. And of course, the wild card is interest rates. I mean, we can't suppress interest rates indefinitely without destroying the dollar. And when interest rates go up, even if the budget deficit comes down, we can't afford to pay the interest on what we've already borrowed.
If we bring the deficit down, that's by definition deflationary and recessionary.
Well, I don't think.
Well, if you believe that in and of itself would bring. I mean, it becomes self-feeding. If we either have a crisis, in which case, by the way, the dollar will get weaker going into the crisis. But I mean, we either do the rational thing, which, when I talk to lots of politicians on both sides of the aisle, they have different ways they want to get there. Now, I would not like the way that the Democrats are proposing to do it. It would not be good for me personally. But for a country, from a macroeconomics perspective, if we solve the deficit, the dollar gets stronger.
Well, but yeah, if we solve the deficit, we're not going to solve the deficit.
Well, no, we don't know that.
But when you say that if we reduce the deficit, it weakens the economy, then you must believe that government spending strengthens the economy. I think if we shrink the deficit, we'll strengthen the economy. But unfortunately, we're not going to do that. The government isn't going to cut spending. We're not going to stop borrowing. And the problem is, the economy that we have today, the phony economy that the Fed is sustaining, is one that is not viable. It's one where we spend money that we don't have. We import things we can't afford to pay for with exports. Everybody is living off of debt. That phony economy has to be allowed to collapse before it can be replaced with a viable, sustainable economy that's based on investment and production and savings.
Wrong.
How is that wrong?
I mean, your premise that you got to was, first of all, that there's no relationship between government spending and GDP. There's a clear
Where does the government get the money?
Well, it doesn't make, what I'm telling you is, if you the Keynesians are right in the 12-month short term.
No,
that's
they're not.
what austerity does.
No.
When you reduce spending, if you're in Greece, you reduce GDP.
No, I say you strengthen GDP. Look at history in America. Look at periods in time. Well, look what happened in the 1920s.
It does 8 to 10 quarters out. It doesn't do it 4 quarters.
No, go look at the American experience in the 1920s. Following the downturn in 1921, we shrink government spending and the economy boomed.
Well, they shrank. First of all, it was a different percentage and a different time.
Yeah, we actually shrank government spending.
The equations, the way they work, says that GDP, and we're getting into wonky stuff, but GDP is equal to consumption plus savings and investment plus government spending plus net exports. When you reduce one of those numbers, you're going to reduce the GDP.
No, but if you reduce the government, the other part can come up. And I'd rather have the business investing and spend than the government just flushing money down the toilet.
It can, but the concept would be as government spending is reducing, you do it at a way in a manner that the consumption and savings and business can grow.
But the government has to get its money from someplace. It doesn't.
I'm not disagreeing with you. I'm not arguing for larger governments. I hate
sure you
governments.
are.
No, I'm not.
But do you want big deficits? You don't want to cut government spending.
No, I don't want deficits. I mean, but I'm just saying that it doesn't become the catastrophe if you're running one, if you bring it down to under nominal GDP.
If I can just jump in here for 1 second. Peter, thank you very much. John, thank you so much.
To your corners, gentlemen.
To your corners, gentlemen. You know, you guys are great, I got to tell you. 2 of the best minds in the business. We got a couple of other, they really are, yeah. We got a couple of other best minds in the business here, too. And my friend Rick wanted to weigh in on this a little bit.
Well, it was interesting to listen as a dialogue, to listen to a dialogue as 2 monologues. And I thought just for fun, I'd answer the question as opposed to use the question as a platform for a statement about global macro. Sorry, guys. With regards to creating and protecting wealth, which I think was the original topic, I have a couple things to say. In terms of creating wealth, and everybody in the panel has created some wealth, by the way. We've all started businesses. We've all been entrepreneurs, as has our kind moderator. What you have to do and what you have to remember is that you have to generate utility. You have to create more wealth than you spend. It's pretty simple. That doesn't seem to be in vogue so much in the United States, which is one of the reasons we have problems. The other thing that I think you have to remember is something that my grandfather taught me, and I'll teach you all this little poem. It's wonderful. Teach it to your children, teach it to your grandchildren, teach it to Congress. When your outgo exceeds your income, your upkeep becomes your downfall. It's pretty simple stuff. This isn't global macro. This is Shylock 101. You can lend money to people where their income exceeds their outgo. The third thing is, once you've made some money, you've got to find a way to keep it. And in the context of this conference, I think that means means you need to be a contrarian, and you need to be an investor in value. It means, as an example, when you consider investments like we're being asked to consider today, the 30-year Treasury, which Jim Grant famously characterized as return-free risk, you have to be willing to say no to asymmetric propositions that are not in your favor. I'll defer to these gentlemen on every aspect of global macro, both of them, by the way, and their positions in many senses are opposed. But I think they both have a similar grasp of the problem. Anyway, that's all I wanted to say.
I think actually one of the, even though Peter and I were disagreeing gently with each other, philosophically, what we actually put our money in is probably not that much different.
No, you're right. So
I want things that are sustainable. I want good businesses. I buy gold every month, and I don't care what the price is. I frankly hope gold goes down because that means I get more coins. But philosophically, I mean, we're probably talking technical differences on how you do equations, as opposed to what you really do is do what Rick does. You know, you're probably better off giving your money to Rick than anybody else anyway. So.
Excuse me.
Oh
no,
you can give a little bit of it to me.
I have to.
And you can give it to Grant, of course.
You know, John.
I knew I liked Mauldin.
John, what I find to be really interesting is listening to your presentation. Excuse me, 1 second. It's interesting what he's saying. That's what I'm saying, Peter. No, what I find to be very interesting is, both you and Peter and Rick and certainly Grant are very succinct. And I like your comment that you made a number of times during your presentation, because you're right on. It's all simple Texas economics. If you take things down to the bottom line, it's going to work. I would maintain that the way things are right now, it's not working. Grant?
Yeah, look, it's, excuse me, at the end of the day, it's mathematics. This all comes down to numbers, and mathematics is one set of laws that you can't subvert. The governments can't change the laws of mathematics. You have too much debt, you have to do something about it. If you can't raise the revenue, you have to cut spending. I mean, it really is that simple. The level of debts that the governments have, the unfunded liabilities, are absolutely unsustainable. I don't think there's any debate amongst any of the guys up here about that. At some point, that's going to matter, and it's going to matter to everybody at once. But for right now, people are willfully blind to the fact and happy to let this charade continue for a while longer. But believe me, mathematics will eventually win the day. There's no doubt.
Mathematics will eventually win the day. We've got about 12 minutes left here, so I want to ask one question, and then I'd like to hear each one of you answer this question. Purely and simply, okay, let's say we'll take 3 to 4 minutes on your answer, okay? A friend of mine asked me prior to this particular panel, he said, put those guys really on the spot. And I said, no, I can't. I'm not bright enough to do that. They're going to throw me out if I try to do that. But he said, all right, ask them a question that I think is on everybody's minds here. And that question is, the resource sector, or I'm sorry, the security sector of the hard asset markets, okay? The securities of the gold stocks, the silver stocks, et cetera, are really they're against the ropes right now. Boy, John, you talk about being in different corners. I mean, they're really on the ropes right now. What do you guys see for the future of our sector? And who wants to start? Of course.
I just have to make sure I get a turn. There's some pretty good competition here. The first thing I would say is that most of the sector's wounds are self-inflicted. We had a whole bunch of these companies that were spending more money than they were taking in. They were acting like small governments. And the private sector can do anything better than the public sector, including counterfeit. In 2009 and 2010, these little companies were issuing phony share certificates faster than the Fed was making dollars. Mercifully, we have a market clearing mechanism here, and we got what we deserved, a good bear market. My suspicion is that the junior market's bifurcating now, with the 10% of the issuers that are the best of the issuers already bottoming, perhaps heading up, and unfortunately, 60 or 70% of the market headed towards its intrinsic value, which is zero.
I want to make one suggestion, by the way, and I should have made this earlier. These are really sensitive mics. So, John, well, when all of you guys were talking, I noticed that if you get real close to the mics, boy, it really sounds bad. So, it doesn't sound bad, but it just could be clear. Who wants to go next on that one? Nobody cares.
Well,
Peter.
No. I mean, I think what's happening, I think I mentioned when I talked about it yesterday, but I think, you got the big money is not the money that we invest at these conferences. I mean, we're just nothing. I mean, the big money is in pension funds, endowments, major forces. And there the conventional wisdom is very set. I know I've sat in rooms with people that manage significant pools of money, and it's very difficult to get them to want to put anything into the resource sector, anything into gold. I mean, sometimes they might be willing to put their own money in, but they're not going to put the institutional money in. And so I think that dynamic is going to eventually change. So right now you've got a very small group of investors that are in these markets, and so you don't have as much liquidity, and you probably have bigger swings in the market. But we've had this, over the last 10 years, there have been plenty of times where gold stocks have sold off, and every time they've rallied and they've made new highs. So I think this is no exception. And one of these days, we're going to make new highs and we're going to keep going. I mean, so far, every time you've made a new high, the trade has been to sell. And you've always had the opportunity to buy them back cheaper. One of these days, that's not going to happen. I don't know exactly when, but I don't think it's too far off.
I'll let you have the last word, John. Yeah, look, I agree with what Peter said. Right now, the traders have got control of the gold stocks rather than the investors. And a bunch of us were at dinner the other night, and we were talking about this, and we went around the table, and none of us could remember a time in the last 30-plus years when any sector was as loathed as the gold mining sector is right now. I mean, it really is extraordinary. You know, tech stocks in the early 90s, healthcare stocks, nat gas stocks. I mean, I've never seen anything like it. But extremes like that are when you find bottoms in markets. And if you're an investor, it's important to look for those. And it's a difficult thing to do, to buy when everybody else is selling. And I mean, everybody else is selling. But we seem to be in the phase now where a lot of the selling is redemptions, it's stops, it's people who are being forced to sell. And that's always, historically, certainly in my experience, been a great sign that a market's bottoming out. That's not to say it's going to turn around and go straight up again, but certainly we are, I think, around the bottom and certainly trying to find a bottom, and I think we're close.
Yeah. John, any closing comments on that topic?
I think I wrote in like 97, 98, and certainly my first book in 99, that if I was going to put money into the natural resource sector, I'd give it to Rick Rule and just go away and see what he wanted to do. And it's still probably a pretty good thing. Grant now is come on to work with us at Mauldin Economics, absolutely brilliant. Peter's been there forever. All I know is that I see a sector that is really in the toilet. And I like that because we're not going to run out of the need for metals. I mean, forget the gold equation. We're not going to run out of the need for all these metals, all the other things that go along with it, energy. It's going to be, we're going to need more and more and more in a world of increasing opportunity and the abundance that I'm talking about. I mean, I'm bullish on the world. I'm just bearish on, really bearish on governments. And so when I see something as beaten down as it is today in an industry that is as vital and as important as it is, I'm actually talking with people putting funds together in the portfolios that we help put that are specifically, for the first time ever, we're specifically going to be focusing on just a natural resource play rather than general trading plays. Because just like Grant says, and Peter, this puppy will come back. And if you wait till the train's pulled out, you may, you know, can it go lower? Sure. But, you know, at some point you have to say there's value here, and you let these guys figure out where the specific value is. I would give them my money. I wouldn't actually try to figure out which stock to buy myself. But as a macro play, it's cool. This is a place to be.
Yeah, welcome to my world, John. We got time for a couple of questions. I want to, as I'm walking back, I just want to say, well, here, let's take this one. Foist, gentlemen. Okay, Gil, what's the question?
Question is that you gentlemen seem to be all, you say the government is the problem. And it seems to me that you're preaching to the choir here. The big issue is, how do we get the average American, I won't use the word what kind of voter they are, but how do we get the average American public to realize more succinctly what's going on? In other words, we've got so many barriers with the huckster media and with the newspapers and the commentators and so on and so forth. Again, I've attended these conferences, we all agree, but the public comes back and you're never going to change it unless you get their attitude changed. Yeah. What's your opinion?
As an Englishman, can I plead the fifth on this one?
Well,
American politics.
Unfortunately, the people in this room are not representative of the average American. If they were, then we could, you know, we could do what you suggest. But have you actually gone to a DMV, or have you gone anywhere where the average Americans hang out? We're not going to convince them of anything. They want their Obama bucks. They want free cell phones, free health care, whatever it is. They're never going to understand this. And that's the inherent flaw with democracy. That's why the Founding Fathers were wise to try to protect us from it. The only thing that's going to change is a complete collapse. I mean, look at the people in Greece. You think, you know, I mean, when the system falls apart, when we have a currency crisis, then maybe we'll be able to do something. But until then, nothing is going to change because nobody has the courage. No politician is going to stand up and say what needs to be done because they're not going to get elected doing that. They get elected by doing the opposite. So they're going to keep on doing what they're doing, and we're going to have a crisis.
People accept change in the face of necessity and they only see necessity in the face of a crisis. If we don't, I mean, there's a lot of people in Washington who see the need and the necessity for change. I mean, I've sat and, you know, talked with a lot of the Republican leaders, with the House majority, Senate majority leader, believe it or not. I mean, with the guys at that level, they see it. They just have different solutions. But if we don't get there, by the way, my take on John Boehner 18 months ago was with Boehner. We were a 4-hour dinner, and lots of wine. It must have been 18 because I quit drinking after that. And I mentioned that it was during the credit deficit debt ceiling thing. And I said, it's too bad you got to work with Senator Reid, Reid to try to get this solved. And Boehner looks at me and he says, Harry, hell, Harry ain't the problem. It's Obama. The man can't make a decision. He's got balls made out of marshmallows. And I've since done we've got to have somebody's going to have to force the president to make a decision. And until we get that, and if it's a crisis, then it's a crisis. I don't think we can go to 2016 without the market beginning to say, you guys aren't serious. We've seen this movie in Europe. We've seen this movie in Japan because Japan's getting ready to hit it. We'd like to slip out at intermission. So I hope, dear God, I've got 7 kids that are trying to, stay employed. I hope we don't have a crisis. 50% youth unemployment, 25% unemployment. I mean, there's lots of opportunity in Greece right now. I was just there. I'm telling you, good time to take your money and go find places. But man, that's not a place you want to live and have been through. It's tough on our country if we have to do that.
Well, if Europe actually let Greece have real austerity, things would be getting better because they'd have to slash government spending. Instead, they're propping the country up, and that's the problem.
Well, it is part of the problem, though. If you ask the Greeks, they don't feel they're being propped up very well.
Well, you can't ask them. It's like, do you ask them? You raised 5 children. Did you ask them what they wanted, or did you do what was best for them?
I've got 7, and it's more complicated than that. and that's the problem.
Well, I got a 10-year-old. I don't ask him I tell him.
Well, the problem is that if that 10-year-old owed you 80% of your net asset value, you'd probably go, well, we need to work here, and that's kind of what the Greeks had. The Greeks had them by the bank debt, yeah. And so it gets complicated. The Greeks they could be in a primary surplus by next year. By the way, the chairman of their presidential council or prime minister's council of economic advisors, of the $40 billion I told you that they were borrowing, looked me straight in the eye and said, "We're never going to pay it back." This was the economist he's a big guy. He says, "We'll never pay it back." It wasn't any dancing. It was just boom.
Well, no. Well, okay. It's not like we're going to pay our debt back. It's the same thing. Our government can't pay our debts either.
Well,
it's only a question of how we default. Do we do it legitimately or do we inflate? But our creditors aren't getting their money back. It's not even within the realm of possibility.
Well, but we said that in the 90s too, and then you can't.
But we haven't paid anybody back. It's a Ponzi scheme. No one gets paid back. We only pay people back when we borrow the money.
There was a time when we were paying it back. I mean, I remember writing.
When did the national debt ever go down?
Oh, it did. In the late 90s and 2000s.
No, it still went up. Every year of the Clinton surpluses, the national debt went up. It never went down. There wasn't a single year where we ended the year with less debt when we started. It was only a bookkeeping entry. Yeah.
Well, if you're talking the deferred liabilities.
No, the actual, not even that. I mean, that's even bigger. I'm talking about the official national debt, which is the tip of a huge iceberg. But even that number, if you go back and look at it, every year it went up. So all we did is go deeper into debt. We never pay our bills. We're like Bernie Madoff, right? We run a giant Ponzi scheme.
Final comment, number 1, the way to solve the problem, we got to run, I apologize for that. 2 comments. Number 1, John made the comment that something fell, I'm not sure what it was. Okay. John made the comment that something about Peter's, the way he raised his children at 80% in debt or something like that, and if it was on your nickel. And Peter made the comment of, or Peter didn't respond to that, but I would say if one of Peter's kids was into debt to that extent, they'd have more than a little friendly conversation about how to solve the problem. You know how we solve this problem? It's real simple. We print a bumper sticker, courtesy of Mauldin Economics. I'm bullish on the world, I'm bearish on governments. Thank you so much, ladies and gentlemen.